My name is Mark Cormack. I'm a Director of Distribution at Pinnacle Investment. And today I'm delighted to be joined by the Plato team to discuss their insights into Australian companies' reporting season. I've got Dr. Peter Gardner here, whose primary responsibility is managing the Plato Australian Shares Income Fund. Pete, thanks for joining me.
It's great to be here.
Look, let's kick off with CBA, who produced their results this morning. Interestingly, whilst CBA has risen rapidly in the market over the last 12 months, the yield on the CBA stock is certainly below that of the market. So Pete, what were their results and what were the key insights?
Yeah, so overall it was a decent result from CBA. Its profit was up 2% from last year, which was slightly above market expectations. But as you say, Mark, given how much it's rallied in the market, it's slightly disappointing the market and it's currently trading down about 1%. Their dividend, they increased by 4.7%, which was a pretty good result. But as you say, that only equates to a 4.2% annual gross yield compared with 4.7% on the market. So it's pretty rare that CBA trades on a yield less than the market. Its payout ratio is now 73% of earnings, and they are able to increase their net interest margin from 2% to 2.08%, which is probably the kind of highlight of the result. It was also worth noting that their bad debts maintained their low position and actually fell from what they were in the first half. So at the moment, we're seeing no increase in bad debts amongst the major banks, which is obviously positive for the economy. Another thing that was interesting with the CBA result was that their share of funding actually went up. And so they've been able to increase the amount of home loans compared with the other major banks. And they actually have got only 34% of their home loans are being done through broker channels compared with 75% of the system. And so CBA are doing very well because the profitability in those non-broker home loans is actually 20% higher than the profitability in broker home loans. And so they're actually being able to move a lot of it onto their own proprietary channels, which is good for their profit. So it's one of the reasons why they're trading it as a premium to the other major banks, but it is a very high premium. I'll also talk you through one extra thing that CBA pointed out in their result. And you can see on the slide here what's happening with the spending. And we've been showing this to you the last few results because CBA have the largest number of kind of customers, and so they've got the best read on the overall economy. And it's really interesting that in their last couple of results, you'd actually seen the spending in the younger age categories, so that's the 20 to 24 and 25 to 34, had actually been dropping in the discretionary category. But in this latest result, they actually increased. They were still below inflation, so an increase of 1.4% in 20 to 24. And this is the middle bar in the kind of right-hand section of the chart that you can see. So the 20 to 24-year-old category increased by 1.4%, 25 to 34-year-old increased by 1.9%. So that's actually positive that we're actually seeing those age categories starting to increase their spending again, showing you that there is some relief for households going forward. The higher age categories are still doing better than the younger age categories. They continue to increase their spending by around that 5% level whilst also increasing their savings. But overall, the economy looks in pretty decent shape.
That's really interesting, Pete, that the consumer has been a lot stronger than expected, especially in that younger cohort, spending more than we expected, and the older cohort continuing to spend. And JB Hi-Fi reported their results on Monday. Looked like a strong result. Like-for-like sales were very strong. And that's off the back of the share price rising very strongly throughout the last 12 months, up 70%. What were your thoughts?
Yeah, it was a great result from JB Hi-Fi. Obviously, the market had been expecting it, as you say, with the share price up 70%. And so they actually fell slightly on the day, but they've recovered a little bit over the last couple of days. But overall, JB Hi-Fi's result and sales were up 10% on last year, which is obviously very strong. EPS was up 8%, which was 3% above expectations, driven by higher sales in all their divisions. So it was a very strong result across the board. They were able to increase their dividend by 7.6%, which equates to a 5.2% annual gross yield on a 65% payout ratio. So a bit cheaper than CBA. And we actually consider JB Hi-Fi a lot more of a consumer staple these days rather than a consumer discretionary, in that we think given their mix of electronics, people are still going to continue to spend on their iPhones. Rather than cutting back. They might actually cut back their groceries before they stop spending on their iPhones. And as you said, their like-for-like sales were up incredibly strongly in January as well. So JB Hi-Fi Australia up 7.4%, JB Hi-Fi New Zealand was up 20%. And so New Zealand's been recovering a fair bit more because of the increase in interest rates they had kind of last year. They've been recovering a little bit more. And then the Good Guys was also up 6.4%. So overall, great result for JB Hi-Fi.
So, Peter, part of the market where there is increased pressure in terms of consumer spending is the insurance part of the market. Suncorp reported their results today. What were your thoughts on their result?
It was a cracking result from Suncorp, actually. Their profit was 10% above expectations and up 73% on last year, with an overall cash earnings of $845 million when you take out the impact of the bank, which they've obviously sold to ANZ. Now, the strong result from Suncorp was because of a benign natural hazards environment. Apart from kind of North Queensland, there hasn't been too many other hazards going on in Australia, which has meant they've got very low claim numbers. They've still been able to increase their premiums by mid to high single digits, is what they're saying. And so that's still pretty positive, given they're not paying out a huge amount of claims. And then their investment earnings are staying strong because interest rates are maintaining this kind of higher level than it previously was. So overall, the dividend was up 20% to 41 cents. And then because they sold the bank to ANZ, they're also able to pay a special dividend of 22 cents. And they're also going to be returning $3 per share of capital to investors as well. Now, that won't come through as a dividend in your Plato distribution, but it's positive to get that money back so that we can then redistribute it to other areas of the business. They're still maintaining high gross written premium increases for next year as well. So that's looking pretty good for them going forward too. So we like Suncorp.
Thanks, Pete. And there's great examples of stocks that have reported this week in the Australian market. CBA, Suncorp and JBH are great examples of stocks that Plato have held in the fund that have delivered not only great income but also great capital growth. From a return perspective, the Plato Australian Shares Income Fund has delivered over 9.5% per annum income return since inception, but importantly, it's also outperformed on a total return basis. Plato certainly show that you have to be tactical, nimble and know where to look in the Australian market to deliver great income and also great returns. If you are after any further information, please do not hesitate to contact your Pinnacle distribution colleague or look at the Plato website, www.plato.com.au. Thanks for listening and have a great day.
Thanks, everyone.